The Mishcon Academy Digital Sessions.
Welcome everyone, I'm Andrew Wolfin. I'm a partner in the Innovation Department at Mishcon de Reya, and I'm your host today. We'll be considering the challenges to and opportunities for the UK tech sector, focusing on access to funding for early stage tech companies. Joining us today, we have Darren Mulvihill, Senior Venture Portfolio Manager at Founders Factory, Sophie Dean, Founder and CEO of Bright Little Labs, and John Spindler, CEO of Capital Enterprise. Let's start, John, with you. Drawing on your experience, what do you consider to be the key barriers to accessing capital for UK early stage tech companies?
The barriers are always the same. The barriers is basically you kind of are going out to try and raise investment with very little data, very little evidence, but basically you will return capital to your investors. So it's always been difficult. You know, there are some tips you can do to basically massively increase your chances of success. One of them is to basically understand how the process of raising investment works. The one is to get as much support and advice you can get and understand that it'll get easier if you can gather more and more evidence that your basic product works, customers love it, and you can make money.
And Sophie, I mean, what were the barriers you experienced? Because of course you raised capital already.
A big barrier for me was being female. 2.3% of investment went into female-led companies in 2020, which was slightly less than 2019. So it's not good, not a good trend. And again, just to mention, I'm female, but I'm white, and Black founders get 0.24% of funding. So there's a huge barrier around the profile of the founder and the stereotypes that people hold. A lot of the VCs were I think 76% of them come from some like consultancy backgrounds. I think their thinking was like, we invest in these sorts of companies and we don't invest in these sorts of companies. And that's a barrier. I raised through a crowdfunding campaign with Kickstarter. Then I raised through Bethnal Green Ventures, who are a tech for good accelerator. Then I raised EIS investment, which was, I think, an SEIS, which I think was about £200,000. And then I raised a Series A startup. Having somebody in my life that could afford to give me £2,000 was the first massive barrier that most people face. That allowed me to run a Kickstarter campaign. And after that, I got onto Bethnal Green Ventures. Bethnal Green Ventures opened up a whole network of investors like VCs and angel investors. And so I'd say the second barrier is how strong is your network? My final barrier when I was raising my Series A was that I didn't realize that a lot of the investment firms are looking for sort of unicorn companies, and they've got this spread bet approach, which is like, we just need X% of the companies we back to be unicorns. And then there's a little red tape that you don't understand as a founder.
I think there's a couple of comebacks from that, actually, and there's very important points that Sophie mentioned. One is if I invest at seed, the average is I have a 6% chance of returning capital. And so that's a kind of like a mentality to understand that these investors are doing things which are strange. The second thing is investors do basically overinvest in patterns. And they look to kind of invest in things that made them money before. And then the third one, which is really important, is it's a power law return game. When you basically invest, basically only 1 in 20, 1 in 30 will make enough capital back to afford all the losses.
Darren, you know, running a fundraising team to help portfolio companies access funding, is this chiming with you? Are you finding that too with your companies?
I mean, look, I definitely agree with John's point that it's always historically been difficult to fundraise at this stage. And look, many would argue that it should be. Looking at this from my perspective, I think, you know, I'm stating the obvious, but the UK has one of the richest tapestries of different funding avenues available to early stage founders in Europe. I think that while there are all these novel and interesting and brilliant ways of you know, getting retail money into startups in an institutional way in the UK, some of these funds are harvesting capital and harvesting fees in a way that I think is ultimately could be to the detriment of the industry. I'm just surprised with the amount of these funds that are popping up, that we're beginning to see perhaps even more of that rather than less.
There's actually a decline, actually, Darren, and look at the figures. I mean, SAS and AIS are down considerably from 2018-19. And the amount of SAS funds now is roughly about a third what it was in 2015-16. And that's because their business models are so bad. The VCT funds are so big now, they don't want to write a check below 3, 4, 5 million.
I wonder whether it's really that it's a psychology investment that has to change. And I don't know whether, John, you've got any thoughts on that.
I think basically, kind of investors, in many ways, you can accuse us all of being a bit like sheep. We all tend to flock, where basically we think the money is. It's basically that only 8% of all the VC money goes into anything around deep tech. What's really interesting at the moment is for the first time, according to Sifted FT, there are now as much money going into Series B and above in Europe as there is in the States.
I mean, what is the government already doing to drive investment into the tech sector?
Well, they're doing a lot. I mean, they did the Future Fund. They're announcing a new Future Fund. They just announced today a new fund for life sciences. They're going to change, we understand, the rules on basic pension pots, particularly public sector pension pots.
Do you think that the Treasury's plans to unleash defined contribution pension fund capital will be a game changer for investment in startups?
Well, actually, the money which really locked in here is actually with teachers and doctors and the public sector. And that money, basically is the largest pension pots. And I don't think they will be funding, early stage startups pre-product market fit. But the argument we'll find in the next year or two is whether this money, which is basically coming in from overseas and here maybe, but is funding these big scale-ups, will that money trickle down so the next Sophie's find it a lot easier to get a 200, 300, 400,000 pound so she can kick off her business?
Well, I was about to ask you about SEIS and EIS because Sophie, I know you've raised. What's your view of that? And could the government do more? Could there be changes made to those release? I mean, they haven't been really revisited for years.
They were really important for me in my first substantial raise, because it meant that the people investing were either going to, if it didn't work, they knew that they could get back, up to 70% of that investment. My frustration with it is that it only applies to higher rate taxpayers, and I can't understand at all why. Are
there other countries that you think are doing this better or that are supporting tech funding more?
I think actually, interestingly, what has been an effect has been the lack of capital going into early stage VC funds in the UK compared to Europe and the States. And unfortunately, I don't want to range that big, horrible word beginning with B, but that has a big effect on the ability of early stage or seed stage VCs to raise capital.
Has that a material impact on this particular issue in terms of the early stage funding?
Before Brexit, 42% of all the money that went into VC firms in the UK came from the European Investment Fund. And it's been replaced, thank God, for the larger funds by institutional investors, American money, and sovereign wealth fund money coming in. But on the raising a small fund, the EIF has been, it's been hard to replace. The British Business Bank basically is still only doing 2 to 3 new enterprise capital funds a year, which replace the 2 to 3 that end their commitment period.
Just to go back quickly to EIS and some of the other things that we kind of mentioned that the government are doing to support the ecosystem, I think if you look at what we have in the UK with the EIS, what it's actually doing is it's creating hopefully a culture of direct equity investments in startups amongst ordinary British taxpayers. I think over time, we will hopefully begin to see the benefits of that, not just in terms of returning monies to those investors that will then get recycled, but actually I think it can become more of a cultural norm. That brings me on to another point, I think, which the government has been, very materially, great on, is EMI schemes. So, actually being able to bring in talent and to, have such an effective and efficient tax rate on the realization of their exit from their options, etc. And I think that those two things will become even more important now in a post-Brexit world.
Is there a feeling the government's not doing enough or it could do more, or that it should be pivoting or expanding what's already on offer?
I mean, I don't like the fact reducing the EMI amounts, reducing the tax, basically kind of cap against tax breaks for founders, et cetera. But I think the general direction has been good. I think we should basically recognize that this is a pretty good place to start a business.
And what about these deep tech companies that are coming out from the universities?
I do think there's a crisis in two groups. Deep tech, yes, because it takes so much money to get to basically build out the product, to get to a stage where it can be basically proven to be efficacious. I think the second one that Sophie's touched on is a really important one. A lot of the seed money at the moment is going basically into teams that have done it before, experienced second-time founders. And so I think it's paradoxically hard, maybe even harder for female and basically kind of Black and minority founders to get funding than it may have been 2-3 years ago.
And Darren, with the portfolio companies at Founders Factory, do you encounter any of these issues as well?
Yeah, sadly, I do. I think, when it comes to, I suppose, the view of that market, what we're beginning to see is that there are more and more groups popping up. So we've got diverse VCs now, we've got diverse angel networks, we've got diverse syndicates. Funnily enough, as the industry matures and the market matures, there will be, it will in some ways become more challenging for ethnically diverse founders to access capital.
If you think about 2.3% of founders that are backed are women, that is bonkers. It's 2.3%. Less than 1% of founders are Black. I know we might speak about sort of institutional funds and how they're applied, but there could be sort of quotas or mandates around them to try and balance out where money is going.
I was going to ask, just I'm conscious of time, whether any of you have any sort of key success or less successful stories you've seen in this space and what we might be able to learn from them.
I've been in angel investing since 2012-13. And if you're angel investing, they always say be patient. And generally your losses occur first. But 3 weeks ago, a first-time founder, a minority-led founder, has basically raised a very big Series A. And my shares on paper have gone up by 82 times. Kind of a
pretty successful success story, I think.
I went to an Islington kind of like dinner party barbecue on Sunday night. And I basically passed, I kind of gave it away. Oh yeah, I just made all this money, blah, blah, blah. And then the person that owns this 2.5 bedroom house tells me their house is now on the market for 1.3 million. So kind of, I'm thinking, maybe there's easier ways to make money.
No, I'm going to have to counter that, because from an economy's point of view, I think we need to invest in ideas and stuff like that.
But that's the whole thing. I mean, in part, actually, even with the changes in the pension fund investment criteria, isn't that it? That, property was sort of safe but boring, or so much money is locked up in real estate in the UK. But I mean, to your point, Sophie, investing in ideas is almost conceptual, but we're trying to tether it to some form of reality, aren't we? And say, actually, that's what we can actually do.
I just think if you're thinking more about sort of the long-term economy of the UK, then we need to invest in innovation.
I can't agree more. We are in a moment at Cap Enterprise, a Cancer Tech Accelerator, and we got 261 researchers basically in cancer with ideas, and we whittled it down to 51. And I'm thinking, if we just give them all basically £1 million each, look at the impact they would have.
Well, I mean, that to me has been the change, in the same way that if I think about all the founders who I work with over the years, there's always, including Sophie, there's always something beyond just making money. It's hard to say that about real estate in quite the same way, but I'm just conscious of time, and I wanted to ask each of you, and not to guide you as to which way to go, but what your respective feelings are about the direction of travel generally.
One thing I just wanted to touch on as well, and it feeds into this last question you've just asked as well, Andrew, is you asked anyone that ran any of those older school angel networks in the UK why most of their angels come to their meetings and become involved. A lot of them would have ended up saying, by default, without any question at all, that it's to make money. And I think that is... I think this whole idea of investing in ideas rather than investing in commodities, where if you're investing in property or you're investing in commodities, you are purely thinking about margin, I think, a lot of the time. Whereas when you're investing in young companies like this, culturally, I think you will begin to see more people invest because it's fun. Culturally, we will begin to see that angel investing will become more and more openly and overtly described as something that is fulfilling and fun and good for you.
I'll take that as optimistic. And Sophie, how do you feel generally about it?
I feel quite optimistic. I think if we're realistic about the future of the UK, it has to be a huge component that's knowledge-based economy, generally speaking. And to John's earlier point about sort of, if you look at globally, where's a good place to start a startup? I think the UK is a really good place to start a startup.
And John, optimistic?
Overall, I'm pretty optimistic. I think there's some challenges, have to be better, have to be more nimble, have to be more aggressive. have to do more, which I think, and that's then comes back to this issue: should government do more? I think they'll have to do more for us to maintain competitiveness. Capital Enterprise funded most of London's accelerators between 2013 to 2019. So we got this data: 761 companies. They're now raised over, I think it's 1.4 billion. 62% of those founders of those companies were EU citizens. Only 26% were British nationals. Now that's a challenge if we want to maintain basically our status as the best place to start a business.
That seems an interesting point to leave it on. So look, it just remains me to thank you. So thank you to Darren, Sophie and John for making it, and thank you everyone for attending. Do look out for invitations for subsequent thought leadership events, examining our reports, other themes in more detail. Otherwise, thank you very much for joining us today and enjoy the rest of your afternoon.
The Mishcon Academy Digital Sessions. To access advice for businesses that is regularly updated, please visit mishcon.com.